Hello, hello, hello. Come on in, come on in, come on in. Happy Tax Tip Tuesday. Hey, you guys, I survived tax season. Yay. I'm going to be getting help, though, because the right kind of help. Because man, oh man, oh man. Okay, so sorry I'm a little late. I was attending the Money Nistas uh, Zero Tax Strategy training. So I told y'all before I continue my education. But come on in, come on in, come on in. Welcome, welcome, welcome. Happy Tax Tip Tuesday, Giving Tuesday. So today I am going to concentrate on charitable contributions. So I am Tracy L. Tate. I am the CEO of TLJ Professional Services, where we are about all things financial. I bring to you almost 40 years experience in accounting as well as taxes. And today I want to talk about contributions because year end is here. It is a way to deduct or reduce your taxable income. It's also that, yes, I'm an AOL girl. So that's the you've got mail. Okay. I am still an AOL girl. I love me an AOL. Okay, I got Gmail and all that stuff too, but I am AOL. Um, but I bring to you over 40 years or almost 40 years experience as well as education. Okay, so I go way back, but I want to focus on charitable deductions because today is Giving Tuesday. Yay! Happy Giving Tuesday. As a nonprofit founder and president myself, I will be dropping our nonprofit in the chat. So if you so choose to give, once you hear this training, this live uh, Tax Tip Tuesday, and you find it on your heart to give, please give to our organization. It takes the village, ca.org, and we would invite you to our tribe. Okay, so the organization is Beat the Streets Inc. in Antioch, California. The website is beatthestreetsca.org. The CA stand for California. So, okay, so when we're talking about charitable contributions, I went over this in detail a few weeks back when I was doing the 10 most overlooked deductions. But I want to concentrate on this because I actually woke up to this question in my text messages from a client I have. So this is what you need to know about charitable contributions. Number one, nonprofits rely on charitable contributions to do the work, period, point blank. So give from your heart, especially if you have to. But I'm going to tell you from a tax strategy, right? You can use it to reduce your taxable income from a personal standpoint and or from a business standpoint. Okay. So use it as a benefit to you while you're giving back. So I woke up to the question, well, how much do I need to contribute in order for it to change my tax status? Well, for this individual in particular, it didn't matter. So one of the things that you need to be mindful of with trying to use this as a tax strategy from a personal standpoint is that you need to itemize your tax deductions in order to have the write-off for charitable contributions. From a business perspective, it's different. You can write it off as charity, and charity could be of your time and or cash, okay? Or items, the same way you contribute items, from a personal level, like to Goodwill and stuff like that. So from a business perspective, so I'm gonna talk about it from both sides, right? So from a business perspective, you can deduct your charitable contribution. So if you do sponsorships for nonprofit events, if you do just give, right? Donations, if you do employee contribution matches, all of those things are deductible from a business perspective. Okay. Now, as a sponsor, if you receive a benefit, meaning like you get the free lunch or the table, whatever it would cost for the ticket price is above that amount. So, as an example, let's say that you sponsor an event through your business for $5,000. Your name is on program book, you're recognized as a sponsor, all of those good things. But you get access to their luncheon, right? Their luncheon, a ticket per um, price is per ticket is, let's say, $100. I'm keeping the math simple. And you get a table of 10 because you're a sponsor, right? You get to seat 10. So in essence, of that $5,000, 1,000 of it is not a charitable donation. Okay, you can write it off, right? It could be business meeting, it could be a entertainment type thing, but the charitable portion is actually the difference between the sponsorship price and what a regular ticket price would be for the number of tickets that you receive. So you get to write off as charity 4,000, and then the 1,000 you could write off depending on the event, right? It could be a learning event, it could be a networking event, because a lot of times, especially as a sponsor, you get to network at these award luncheons and stuff like that. So I'm keeping in mind, I'm part of the Oakland African American Chamber of Commerce, and we just recently had the 20th annual award luncheon, right? So with them, so I'm thinking about all of this stuff, right? As a sponsor, there were sponsorships. The ticket prices were actually $150. So you do the math, right? What would a regular ticket price cost? So if, as a sponsor, even though I had a table of 10, if I donated 8 of those 10 to somebody else and I only use, say, 2 of the tickets, then you only record 2 of the tickets as like your networking expense. And then the rest of it is considered a charitable donation. All of it is a deduction in essence, period. Okay. So charitable donations from a business perspective is pretty much 100% deductible. Okay. Keep that in mind. Give back to charity. Again, I put my charity in the chat, beatthestreetca.org. Okay. Now, from a personal standpoint, if you itemize your deductions, meaning that you have high medical costs or you pay high taxes, so state of California, you pay high taxes, even though it's limited to 10,000, it depends on your filing status as well. You may still only do the standard deduction because your other deductions are not enough to exceed what you would get as a deduction in standard deduction. So be mindful of that. That's why charitable giving or charitable contribution is called charitable for a reason, because you may or may not get a benefit from it, right? Your benefit is giving back. That's that feel good, and it's priceless. Okay. So when you want to give from your heart, but you can also use it as a tax strategy, especially from a business perspective and possibly from a personal perspective. So again, if you're itemizing your deduction, you get to deduct over the 2.5% of your AGI for medical, but you get to deduct up to 10,000 of taxes. So that could be property tax, income tax, which is state income tax, not federal, but state income tax, sales and use tax. It could be all of those taxes, okay? And then plus your mortgage interest. So you have to have a mortgage. So a lot of people don't itemize deduct if you have a great rate on your mortgage, right? And it doesn't exceed the standard deduction, because as a standard deduction, it's 12,000 for single. But if you had a household, for example, it's 19. Married filing jointly is 20-some thousand. So if your interest, the taxes you pay, your medical, things like that are not close to the standard deduction, then what you contribute to charity, you have to look at it that way. Will it make it exceed the standard deduction? Because if not, then there is no tax benefit to charity giving. Okay, so that's the good and the bad side of charity giving. So people think, oh, I can just write off my charity giving. You cannot if you don't itemize. So from a personal standpoint, it only is recognized if you itemize your deductions instead of taking the standard deduction. And when you're looking at it from a reducing your taxable income, you want the higher of. And that's how all software works. But if you manually filling out a piece of paper, don't you do your itemized deduction and it's less than the standard deduction. Always take whichever is higher. Okay. That's the point of having a choice. Okay. So for charity giving, is today is Giving Tuesday. Okay. Charities rely on Giving Tuesday because grants only take us so far. So I'm going to give you an example, like for our nonprofit, because we get donations quarterly from one of our grants. By the time we get that money, it's stuff piled up. So when we get it, it goes right back out, right? So we rely on community giving, charitable contributions, donations from the public to help us sustain between those grant payments, if that makes sense. And that's not just Beat the Streets or my organization, it's most charities, okay? Even $1 million charities, they do the same, because they're always waiting. So I have a nonprofit client that even though they have a government grant, you waiting on government time. The government, especially when it's transferring fiscal years, you might have to wait some months to actually get your grant money, right? So we rely on the public's help to help us give back to the community. Okay, so Beat the Streets, we're located in Antioch, California. We are a resource center, ages 11 to 29, around education, employment, and life skills. We work with disadvantaged or at-risk youth. That's from juvenile probation, that's in continuation schools. That's who we target, those at risk of dropping out of school or have dropped out, to try to get them back in school and more productive in life. Okay, so we do the mentoring, tutoring, we do the job placement, job readiness, right? Work readiness program. So for us, your generous contribution, they add up, even the dollars. Like I've done a dollar campaign before, right? Them dollars add up. It's like pennies add up, right? So organizations like mine rely on charitable contributions to sustain, especially between grant payments, right? So please give. It's saving the community. You see all these snatching grass, especially here in California and the Bay Area. It's ridiculous out here. These kids better get a life, and they better get a life quick. You hear me? So giving back to charity, that's this Tax Tip Tuesday topic, right? Giving back to charity, there's how you recognize it and why you give matters. Okay, so give from your heart, whether it's a tax deduction or not, but you can use it as a tax strategy. So we're more than halfway through. So let me reintroduce myself again. I am Tracy L. Tate. I'm the CEO of TLJ Professional Services. We are about all things financial, and today we are talking about charitable donations. I bring to you almost 40 years experience in business as well as accounting and taxes. Okay, so from a business perspective, I was talking about you can write off 100% of charitable donations through your business, okay? 100% through your business. Now, if you are sponsoring an event, the piece that's charity is above and beyond whatever your ticket price is if you get something for it. So that's even if you go to like an award luncheon and they do a raffle or they do gifts, things like that. It's above and beyond what you receive, okay, that you get to write off as a charitable donation. So if it's a luncheon and you receive lunch, whatever the ticket price is, you get to write off the amount above what that ticket price is that you use, right? Okay, so the example I gave was the Oakland African American Chamber of Commerce. They just had their 20th award luncheon, and sponsorship levels, certain sponsorship levels go up and up. But like as a $5,000 sponsor, for example, if you got a table of 10 seats and that you could have your employees attend and so forth. So whatever the ticket price is times that 10 would be considered more or less networking expense. It's still 100% deductible, but it's not 100% in charitable contributions because you benefited from it. Right? So if you benefit from a donation, whatever that benefit amount is, hold it appropriately. Okay. So if you bought something as as one of their raffle items or something. That was something you received. Make it something for the office, right? That's an office expense. Whatever that raffle amount was, whatever you paid for it, is the office expense side of it. That's not charity. The charitable piece is above and beyond what you receive in value. Okay. So again, the key word is value, what you received above and beyond in value. So the value was the ticket price. If we're talking about just the luncheon piece itself, right? So you received lunch for being a sponsor to the event. Okay. So those 10 tickets that you got for the table, that's more or less your networking side of things. So you write it off under networking, business, marketing, advertise, it's not advertising, but it is marketing. Okay. Networking is marketing. Okay. So write it off under marketing. But the rest of it, of the sponsorship level, actually is a write off as a charitable contribution. That's from the business side. Back to the personal side. Charitable giving only matters if you itemize your deductions, and that your itemized deductions will be higher than the standard deduction. Okay. So that's the reason why I say, first and foremost, give from your heart. Okay. Charity begins at home. Okay. And your community. I'm from the generation that the whole neighborhood looked out for everybody. That's not the case anymore. So there are more nonprofits, more organizations out there that is trying to keep your kids up, in essence, and trying to give them things that they're not getting at home, in essence. Okay. So give from your heart and give with purpose, right? It's a feel good, it's irreplaceable. Okay. It's priceless, literally, to give, especially when you give from your heart. But from a tax strategy, it only helps from on your personal tax return if you itemize your deduction. Okay. And you will not itemize if your standard deduction is higher, period, point blank. Okay. So be mindful of that. You have until December 31st, and that's next month, right? It's tomorrow. Let's wait to say tomorrow because I don't know where November went and really don't know where October went. But I've been head down in taxes. That could be why I missed 2 whole months. You hear me? But December will be here and gone because the holidays will be here and we get busy, right? So anytime you're busy, time flies. Okay. But it's kind of like your last ditch effort to reduce your taxable income. So charitable giving from a business perspective reduces your taxable income or your net profit. It's intentional to reduce your net profit so that you can pay less taxes. Okay. It is an expense for the business. Okay. From a personal standpoint, if you tithe, right, and you're a high income earner, then more than likely you are itemizing. Now, you don't have to own a home to itemize. So people get that confused as well. You don't have to own a home to itemize. It depends on what you write off, right? So if you're a high income earner and you pay at least 10,000 in state taxes, then you might itemize, especially if you're single, because single deduction, standard deduction is only $12,000. If your taxes exceed, like if you pay more than 10,000 in taxes, they cap it at 10,000, period, right? So 10,000, if you contribute 2,000 more, contribute $2,000, $3,000, then you're above the standard deduction, right? But when you get into head of household, married, filing jointly, the standard deduction is extremely high. So you may or may not benefit from using charitable donations as a tax strategy to reduce your taxable income. So it all depends on what your itemized deductions look like as to whether or not it will benefit you from a tax perspective on your personal tax return. Okay. So I hope this has been some valuable information to you. Again, my nonprofit that I am the founder and president of, I started it in 2005 from my home, called Beat the Streets Inc. We are in Antioch, California. The website is beatthestreetsca.org, and we would greatly, greatly appreciate any contribution. So them dollars add up, them $5 add up. So no donation is too small when you're giving to a charity. Don't ever think that, oh, that's too small. No, every dollar counts, because otherwise, like in my case, it comes out of my pocket when we don't have the money. Okay. And this year, life has been life. And so my charity has been suffering a little bit, right? Because I haven't been able to contribute to my charity as much as I normally would because I've had to use it personally. Okay. So it takes a village to raise our youth. And that's exactly our motto at Beat the Streets. We turn nobody away. We do focus on 11 to 29, ages 11, 29, around education, employment, and life skills. Working particularly with juvenile justice youth as well as continuation youth because they don't get the same benefits, services, opportunities that regular youth get in school. Okay, so this has been my Tax Tip Tuesday. Happy Giving Tuesday as well. I hope you have a happy holiday and you have a blessed Thanksgiving. Let's end this year with a bang, okay? Charities depend on you, but then it's a tax structure for you if you have a business. So you're not sure what to do, hit me up. You know how to reach me. Follow all pages, TLJ Professional Services or About All Things Financial. Be blessed.